As you've noted, just because stocks are overpriced, it doesn't mean that a bubble, if we're in one, is necessarily about to pop. What is to stop valuations from climbing even higher for years, possibly?
Put it this way. When you have reached this level of obvious super enthusiasm, the bubble has always, without exception, broken in the next few months, not a few years. It's always. You can't maintain this level of near ecstasy. It can't be done because you've put in your last dollar. You are all in. What are you supposed to do beyond that point? You can't borrow any more money. You can't take any more risk. In fact, you know in your heart of hearts, you have never taken this level of risk and you never thought you would. It's just that this opportunity is so exceptional. This is going to be your once in a lifetime. And how do you keep that level of enthusiasm going indefinitely?
Hey guys, what's up? My name is Spenny. That clip I just played for you was the day before Palantir went on its massive run to the high 40s. Since then, we all know what happened. We've seen a massive decline of around 63%. Now, is this a long squeeze that occurred? For a lot of you guys, you probably have never heard this concept. You probably are aware of a short squeeze, but not a long squeeze. Now, before I explain what a long squeeze is, make sure to drop this video a big thumbs up. It really helps out to grow the channel, and feel free to subscribe if you want to see more content like this. So, a long squeeze is simple. It's the opposite of a short squeeze. You see, a short squeeze occurs when there's a bunch of investors betting that the stock is going to go down in price, but if the stock increases dramatically, it can put the pressure on that short seller, forcing them to cover their positions, which is going to put more pressure on the stock going higher. Now, a long squeeze is opposite of this. A long squeeze occurs when you have a ton of investors holding long positions in the stock, and usually they are high in margin. Just like the clip I just played for you guys, I think this was very relevant to Palantir. I think there was a ton of euphoria in the market back in January, especially around Palantir, and I think a ton of people were going heavy into margin, specifically into Palantir. In my opinion, this worked for a short period of time where you saw that dramatic increase in Palantir's price. However, we reached max euphoria and many of those investors were maxed out in margin. So when the stock price actually started to fall, a lot of these investors would have started to get margin calls. They would have had to cover their positions. The bank would have called them personally saying, you need to cover this position, you are losing a ton of money. That puts more pressure on the stock to go down. So essentially that is what a long squeeze is. It's the opposite of a short squeeze, and this happens all the time in the stock market. And I have some data to back this up. Now, if we look at the actual margin data out there, it supports this thesis. You can see that the last few months we were around 800 billion in margin. That is record breaking. If we go back to the year 2020, you can see it was around 500 and then went all the way to 778 billion towards the end of the year. If we looked at the years previously in 2019, it was primarily in the 500 range, and in 2018 you can see it was in the 600 range mostly. But you can scroll down, never in history has it been anywhere close to the 800 billion. This is a classic example of max euphoria in the market. People were fully in margin, and they were fully in margin in only certain areas of the market. And that's what made this even so much more powerful than what it would have been. In my opinion, this margin was primarily focused in SPACs. We've seen a ton of SPAC euphoria this past year. Another sector was EVs. EV stocks were one of the hottest sectors of 2020. A lot of these stocks you've seen massive corrections in. Where we haven't seen margin, in my opinion, was the forgotten side of the stock market, and that was in value stocks. Value stocks up until just, several months ago were completely forgotten about. Now they're getting a lot more love though. The market has been transitioning. And another thing with Palantir, it was a very hot stock on Wall Street bets. What do we know about Wall Street bets? These investors, primarily use Robinhood. Obviously, I know not all of them use Robinhood, but a lot of these guys are on Robinhood. Robinhood is very easy to borrow money on margin. And not just that, I generally believe that a lot of these investors who were jumping into a lot of the hype stocks were using margin. I've been using margin myself. I just feel like most investors this past year have been using margin. But if you're on Robinhood, there's probably an even greater chance you're using margin just because of how easy it is. So that would have really contributed to Palantir's long squeeze as well. And most of the stocks that were on Wall Street bets have faced similar fate to what Palantir has the past few months. GameStop is down quite a bit from its all-time highs of the mid-300s. BlackBerry down to $8, up from about almost $30 was the peak. And there's many more examples of this. And so I do think that Palantir suffered a long squeeze. There was a ton of margin. It was max euphoria. It really got carried away from the fundamentals of the company. And obviously there was more than just that. I recognize that insiders sold. There was an inflation scare where we saw the 10-year bond yield actually increase dramatically in a very short period of time. There was a lot of factors, but the long squeeze is a factor that not many people have thought about or talked about. So this is an important concept to understand, just moving forward as an investor. This works opposite as a short squeeze. When you see people maxing out at margin, I suggest you guys look at these stats once in a while, see how the euphoria in the market is going. When you see max euphoria, 800 plus billion on margin, and you see stocks rising 100% in a month, and that's just the normal, you might want to be a little bit more cautious in those situations. It can really burn you quickly. Anyways, guys, that's all I have for today's video. Make sure to comment down below. Let me know your guys' thoughts around this concept. And really appreciate you guys watching until the end. Make sure to subscribe to this channel if you want to see more content, and I'll see you guys on the next video.